Hello and a very warm welcome to Business Today TV. I am Chetan Bhutani and today I am joined by the Chief Financial Officer, CFO for Tata Motors, Mr. P.B Balaji. Thank you, Mr. Balaji, for speaking to Business Today TV. First question to you, of course, the biggest takeaway of the numbers was, of course, the narrowing down of loss by a big amount to about 1,033 crore rupees only. What do you attribute this to, and what are the future plans to cut that loss further down?
Thank you. Thanks, Chetan, for having me on the show. The combination of factors led to the loss reduction. One, of course, let's get the basics out of the way. I think there was obviously last year was also a exceptional loss that was there in the base. So if you park that aside for a minute, what I would be more focused on is sequentially how things are improving in Tata Motors and in JLR. And this quarter is something that, as we had indicated as well, both with respect to JLR and commercial vehicles and passenger vehicles, the Tata Motors business, we have seen sequential improvement in margins. And the factors leading to fundamentally higher volumes coming through as the semiconductor situation gradually eases in JLR. At the same time, in domestically, I think we had a pretty strong volume growth happening both in commercial vehicles and passenger vehicles has been on a tear in any case. So if you look at the passenger vehicle segment, for instance, we are now EBIT break even, PBT break even, cash break even, which is quite a big distance from what we used to be in the past. And commercial vehicles has always been a strong performer for us, and it has been impacted quite severely by the commodity inflation, coupled with a dramatic demand slowdown over almost 3 years now. And this quarter, we are now starting to see the first stirrings of that business starting to pick up. And hopefully with the stabilizing of the commodity prices albeit at elevated levels, one should start seeing this business also to continue to sequentially improve margins as well. The fly in the ointment right now is the semiconductor situation and what I would call as near-term issues, be it China, be it Ukraine, that we are currently dealing with, which impacts JLR to a large extent. That is something that will hopefully pass. And then we do expect to follow this track of sequential improvement.
Right. Mr. Balaji, tell us about the performance of JLR. You just mentioned about sequential margins getting better for both Tata and the JLR. Tell us about the sequential margin of JLR and the factors behind the improvement in the margins.
Yeah, see, if you look at JLR ended the year at about a 0.4% kind of EBIT margin. And this is something that if you started the year with, we had serious EBIT losses that were there. And as the quarter ended, you could see this number increasing quite a bit, about 2% EBIT margin. And this is obviously well below what we would want that business to be delivering. We have guided for a 6% kind of a number in FY24. This year, we have said we will deliver at least a 5% plus kind of an EBIT margin. And that is totally dependent on the volumes we are able to put through. Because if you look at the break-evens of JLR is now down from what used to be almost 600,000 vehicles, is now down to just about 320,000 vehicles. And therefore, when the volumes do come in, you see a significant operating leverage kicking in as the break-evens are now being set right. And with the Range Rover launch that has just happened, the Range Rover Sport launch that has also just happened, we are sitting with an order book of almost 168,000 units. And as the semiconductor situation improves, these volumes will get served, and that should give us the kicker that we are looking for in terms of the EBIT moving to 5% that we are looking at, and cash flows of 1 billion plus that we are looking at this year. We're pretty confident of it. Short term, there could be challenges because of the semiconductor situation coming out of COVID lockdowns in China, but that's not expected to be long lasting. We do hear, speaking to the Chinese team yesterday, we do hear that by end of this Sunday, we are expecting to see the first round of relaxations in China. And by June 1st, they're seeing a significant relaxation. Let's wait and see how it plays out. But thereafter, we should see rapid pickup in JLR.
Absolutely. You were mentioning about an order book of 1.68 lakh vehicles for JLR. Before I come to the technical part of the numbers, for the common viewers for India today, I would like to ask you, 1.68 lakh for JLR. How is the booking period or the waiting time for other vehicles in the PV, CV, and the EV segment? EV segment is, of course, a very new baby for Tatas. But yes, how about the CV, PV, and the JLR segment?
See, CV, the demand continues to remain robust, and we are seeing freight rates increasing, and that is then giving the transport operators viability. Otherwise, the kind of price increases in fuel, as well as the product price increases and rising interest rates would have been a challenge for them to meet. freight rate increase because of the GDP picking up means that they are able to manage their P&L and their cash flows as well. That we expect that to sustain. So I do see with the kind of investments the government is putting on infrastructure, we do expect to see a strong pullback in the CV business as we go forward. The fly in the ointment there we need to watch out for is interest rate rises and fuel price increases. But that seems to be managed through the managed shift to CNG that we are seeing happen quite rapidly, as well as the freight rate increases that the market is seeing. So that's CV for you. Passenger vehicles, I think for us, the order book continues to build. And currently the waiting time is anywhere up to 8 weeks on the passenger vehicle side. And on the electric vehicle side, it's more like about 5 months at this point in time. And this is before the launch of Nexon Max. So Nexon Max has just been launched. So therefore, we do expect this demand to pick up even further as we go forward. The penetration of the EV in the portfolio is almost 7.5% already. And our plan is to take it at least about 25%, which will be quite a substantial flip in terms of the overall.
If I may interrupt you, did you just say that the exposure of EVs into the whole vehicle segment is about 7.5% as of now, and the plans to take it 25%?
That's correct. Currently, our EV as a percentage of total sales is 7.5% for Tata Motors. And our plan is to take it to 25% in the coming by 2025.
I think the chairman or a senior member in the management commented that there are plans to make semiconductors in India. Where is that, and how much money are you allocating for that?
It is the chairman had made that statement as one of the areas that the group is looking at. Plans have not been confirmed as yet. And as and when the group is ready to make an formal announcement, but it's an area that they're looking at quite actively and something that we should expect an announcement sooner rather than later.
Right. So what are the supply side constraints we are seeing as of now? Because there are two reasons in particular we are seeing because of geopolitical conditions and of course the inflationary pressures coming out of that. Is the semiconductor shortage still very relevant for Tata? Because we have heard that Tata is still one of the best performers as far as delivering vehicles is concerned. But is it still affecting you in a very bad shape? And what are the steps that you're undertaking to resolve that issue? And what was the impact on the margin subsequently in the year gone by?
So a bit of a breakage in the line, but I do take out the question in terms of semiconductor issues being a challenge for us. And that's an area where we are working on from different directions. One from a contracting side, the other from a planning side, and third from a redesign engineering, the re-engineering the whole semiconductor supply chain, as well as the semiconductor intensity on the ECUs that are there. This is something has given us good results in the case of Tata Motors, and that's the reason you saw us growing well ahead of the market. As far as JLR is concerned, the first two has worked well for them, so that's the reason you're seeing the volumes pick up sequentially. But we believe there's more work to be done on the engineering side of that, but it's a more luxury OEM, it's more complex to work there than here, but they are very much on the case, and I'm sure they'll crack that as well. So a combination of these is how we expect the semiconductor issue to resolve itself.
So Balaji, what are you foreseeing the impact of the geopolitical situation impact from the Russia-Ukraine war, the China lockdown? I know you've just mentioned about the China lockdown, but as a comparative situation, what do you anticipate this two and the impact of margins?
Yeah. As far as Ukraine is concerned, there are two impacts. One is supply security, the other is inflation. Supply security, not to a great extent. We just have two vendors in Ukraine, and they are in the west of Ukraine, and those supplies are being rerouted through others. The bigger one is inflation, be it on commodities, be it on precious metals, crude, and the Fed starting to rise interest rates everywhere, interest rates starting to rise. So I think the inflation is a bigger concern than the supply situation, supply security at that point in time, how it plays out in terms of demand. So far, we do not see an impact on demand on the premium luxury end that is there. But we need similarly in India, it does feed through into India in terms of imported inflation, and that we need to watch the demand situation on that closely. But if it is supposed to bring down inflationary expectations, which I think is good for the economy in the long run. So I think the right steps are being taken to manage that. Let's wait and see how it plays out.
Absolutely. What are the allocations we can expect for FY23 in various segments? Could you please elaborate on the PV, CV, EV segments? How much capex have you planned?
Totally in India, we are planning about 6,000 crores of capex and split between CV, PV, and EV. We haven't given the split by individual companies, but fair enough to say that they will be well funded to take care of their requirements to get future ready as well as their product intensity. Both CV and PV will be self-sufficient in that funding. Whatever capex they are putting in, they'll generate cash after that. In the case of EV, we'll invest ahead of the curve. That's the reason we did the whole TPG deal, to get those investments firing. And our intention is to get 10 products out by FY25 and be future ready. And we will ensure we invest in line with that aspiration that is there. Both CV and PV will be investment for in line with affordability, but EV alone will be investment in line with aspiration.
Right. And what is the outlook for the coming year, sir, with respect to the EV, especially because you just mentioned that the PV and the CV will take care of itself and manage with the cash that's available, but EVs need a little bit of more hand holding. So how much are you planning to handhold the EV sector?
In year we haven't called out the money by business, but we have called out in any case a larger number, saying that we expect to invest by 2025 almost $2.2 billion of investment. That is 16,000 crores of investments will go into EV, and we are on course for managing that number, and we will pick up momentum as we go along. But if you look at the launch of Curve, the launch of Avinya, all these requires monies to go in the Gen 3 platform. Whatever capex debottlenecking we need to do, whatever localization that we need to do for EV parts, all of them funding will go into that, and therefore EV will get well funded from that.
Last question to you, sir. What's new coming up? I mean, I know you don't. The management doesn't make commentaries on the future launches, but it's my duty to ask: what can the consumers or the viewers expect from Tata Motors next, be it in the PV, CV, or the EV segment? EV, of course, we saw the Tata Nexon Max coming up. What's next at the PV segment, sir?
I think the portfolio is pretty vibrant, and we have promised that it will remain new forever. And therefore, the portfolio will continue to get refreshed as with exciting launches, exciting features, as well as powertrains. But it is fair to say that a lot of work from more than we have now a fair set of nameplates in the passenger vehicle. So more than nameplates, the excitement moves into powertrains, because we do see with the kind of fuel prices that are there, CNG is getting more and more traction. Our own CNG launches have been absolute blockbusters. So therefore, we need to ensure that we maintain the momentum there. So it could be, and there's as much work happening on the powertrains and transmissions as they are happening on the new nameplates and brands. So with the EV being now funded separately, that gives PV the liberty to actually invest ahead, invest aggressively. At the same time, with their volumes lifting the way they are currently lifting, market shares lifting as they're able to afford it as well. So therefore, we are in a good place with respect to choosing where we want to invest. But at the same time, we'll be very clear that they are well differentiated launches. Just not launching nameplates after nameplates is not the solution. And we have nameplates to choose already. So those will be taken to the logical end.
Right. So are you hinting that in the times to come, the PV segment would focus more on the CNG part?
Not necessarily. We will have exciting powertrains, exciting transmissions, and exciting nameplates as well. But we had a blitzkrieg of launches that have just happened. We had to juice that to the limit. Then the next round of stuff come in as well. So we are in a good place with respect to the options that are there in front of us.
Well, Mr. Balaji, pleasure as always to speak to you. Thank you so much for joining us on Business Today TV. Well, that was Mr. P. Balaji talking about how Tata Motors is completely focused on the EV sector, the PV and the series, and of course, narrowing down the losses is the biggest takeaway of the numbers. Thank you for watching.
Yeah, thank you. Thanks, Chetan. Thanks for having me.
If you like the video, do like, comment, share, and subscribe.